Our first theme on the economy is the expansion should continue, but at a slower pace. What we have seen in the past couple years is that the consumer has been much more resilient than anyone had anticipated, and the consumer makes up the majority of GDP. Whether it's low unemployment or using credit cards to fund spending, consumers have been very resilient. We think that's going to actually reverse course, though, in the first half of this year. We do think that the consumers will slow down, and this will result in some slower growth rates. Not necessarily negative, but some slower growth rates. The consumer at this point is very stretched, spending on fumes. The ongoing inflation, this has been a continued burden for consumers, and we're seeing that, as we mentioned, in credit card debt. And you can see on this chart that credit card delinquencies are now near the highest level we've seen since the pandemic. You have at least a minimum, almost 40% of credit card holders that have maxed out at least one credit card. This is going to weigh on consumer spending, and we think that's what you're going to see in the first half of this year. As the uncertainty around a new administration, about the economy, about inflation, this will take a toll on consumers. So we think the first half is the most vulnerable. However, as you get into the second half of the year and going forward, we do think that there's a lot of optimism you can see specifically in the U.S. economy. There's a lot of spending right now from an AI perspective, from a technology perspective, and if you look at this chart, the small businesses are seeing the biggest increase that they expect in CapEx spending that we've seen since almost the pandemic. So this is what we expect to drive growth in the future years. There's a lot of government spending being put forward for AI, technology. This should continue to support the economy and cushion some of that blow from the consumer slowing down a bit.